Cathie Wood. Cathie Wood gets our full undivided attention here tonight, folks. Only one video to react to, and that's this Cathie Wood video that I don't know if this didn't get pushed in the algorithm or what happened, okay? But only 8,000 people have seen this video, and I'm surprised because usually Cathie Wood related videos, even though she obviously had a tough year last year, they still get a lot of views. And so I don't know what happened with this one, but it went totally on the DL. And I just started watching a portion of it, and I'm like, I gotta react to this one. There's actually some interesting subjects she's talking about here in regards to electric vehicles, Tesla, like other subjects as well, that I was like, oh my gosh, okay, this is actually a good video to react to, but I have no clue why this didn't get pushed. Maybe it's because it's on Bloomberg and Bloomberg doesn't get the most views. I don't know, okay? But nonetheless, we're going to react to it. Hope you guys enjoy this as always, and I appreciate everybody joining me. Nearly 24,000 Flippin' Flapjack and subscribers now on the channel. Thank you every single person that has subscribed to the channel. I appreciate y'all. If you're looking to apply to join my private stock group, the private wealth group, the description area is where you'll find the application in there, okay? Now, before we get into this, I'll show you guys how ARK has done this year so far. Year to date, ARK's up an impressive 26% versus S&P 500's up less than 4% over that same amount of time. Meta stock's up 36% for reference, and Nvidia's up 62%, Tesla's up 82%. I just show you those as reference so you can understand where ARK is at, okay? And so the important thing about this, okay, one is a lot of stocks do far better than our fund, right? But that's not the important part. The important part is look at the divergence with just a little bullish activity in the market. S&P 500 up less than 4%, and yet ARK's up 26%, okay? There's definitely a lot of people that have been laughing at Cathie Wood for the past 12 to 18 months. But whenever the day comes, and who knows when that day will be, when we go bullish on this market for real, there's a high probability, I would say, Cathie Wood's going to start outperforming the market again, and maybe even quite substantially. In a bear market, obviously, her stocks are some of the worst in terms of kind of like people don't want those stocks. But when the market starts turning bullish, those returns will start likely pouring in again. And so all those people that will have laughed at her will end up having to eat their words. And then they'll just be talking about, oh, remember when her returns in 2022? And it's like, dude, that's why I had never joined the gang of like ganging up on Cathie Wood, because it just doesn't make sense. Because at the end of the day, like, you go through very bearish markets maybe once or twice out of every 10-year span. But the rest of the time, you're usually in bull territory. And when you're in bull territory, strategies like Cathie Wood has, that a lot of folks definitely see as very, very risky in a bear market, they work pretty darn well in a bull market, okay? And I have no money invested in her fund. I don't plan to invest any money in her ETF, that is, right? I prefer to invest my money my own way, but at the end of the day, is, you know, I wouldn't be surprised if, 5 years out, 10 years out, her returns are looking much, much better than they look today. So anyways, let's get into this.
In our flagship strategy, which is ARKK, Tesla is our largest holding. But if you look at ARKQ, which is our autonomous technology and robotics strategy, we also own other names like BYD in China and XPeng and a little NIO as well. Now, why do we think EVs are the place to be? Well, we are analyzing battery technology, but more important, drivetrain technology, which includes batteries. And if you look at the cost curves associated with drivetrains, what you'll see is that for every cumulative doubling in the number of electric vehicles produced and sold, costs decline by roughly 28%. And it seems as though already the total cost of ownership of an electric vehicle is lower than that of a gas-powered vehicle, which means which helps us understand why last year electric vehicle sales globally were up, I believe it was 62 or 64%, while gas-powered vehicles were down about 7% globally. So the electric vehicle shift is underway. Consumers want electric vehicles, a total cost of ownership cheaper. So last year, there were 7.7 million electric vehicles sold around the world. We think that number is going to 60 million in the next 5 years. Now, the consensus estimate is that it's going to only 20 million. So there's still a big gap between where we are and where the consensus view is. That 60 million, we believe, will account for 75% roughly of all vehicles sold in 5 years. So electric vehicles, very important. Now, many people focused on Asia say, wait a minute, BYD is winning here. And if you look at last year's sales, BYD's sales, if you look at hybrids and battery electric vehicles, they were up 211% to roughly 1.8 million units, whereas Tesla's vehicle sales were only up 40%. And so the question from Asia is, well, isn't BYD ahead of the game here? You might say yes, based on those statistics. But if you take out hybrid vehicles, and we think hybrid is going away. Hybrid is two systems in one, much more complicated, much more costly. And you look on that basis, BYD's pure battery electric vehicle sales last year were 900,000, whereas Tesla's were 1.4 million around the world. But electric is not the whole story here. In fact,
I would like to hear percentage growth, okay? One thing let me push back on Cathie Wood's talking about here, right? She's expecting the market to kind of be 3x. I'm not that bullish, okay? I'm not that bullish. She's at a whole different level of bullish. I'm obviously very bullish on Tesla, very bullish on EVs in general and their growth over the years. But yeah, I mean, 60 million in 5 years, it's a possibility, but I don't see it being super probable. I think 20 is a pretty safe assumption. I think 30 to 40 range is definitely doable, but that 60 number's pretty far out there, right? We know there's a lot of problems with raw materials, minerals, and other, just the whole supply chain. If you're talking about, like, it's got to be more than Tesla, right? And I can just tell you, like, most of these big auto manufacturers, they don't even have their supply chains, like, even close to being ready to scale. And I think a lot of these older automakers are still going to be trying to push ICE vehicles because that's where they're really still making a profit. And I think their shareholders are going to still push for that. So I think, if anything, these companies are trying to delay the inevitable, and I don't think they're going to push EVs as hard as you might think. And so therefore, I think Cathie's prediction there is just high. Okay, that's just my personal opinion on that. And I hope it happens because there's just more bullishness for Tesla over this next 5 years. I just think she's a little extreme in my personal opinion in kind of her numbers there. But we'll see what happens. I just think it's going to be very, very hard for multiple reasons.
From our point of view, when it comes to Tesla, their autonomous strategy, autonomous taxi platforms, is much more important than their electric vehicle strategy. In our view, our $1,500 price target for Tesla, it's a little over $200 now, but our $1,500 price target in 5 years is 2/3 because of autonomous. And when we listen to BYD, we do not hear autonomous as a strategy. We hear it more with XPeng. But again, they, from a unit volume point of view, are far behind BYD and Tesla. So that's how we're looking at the world right now. I think when you're talking about electric vehicles, you're not talking just about the drivetrain strategies. I think the companies that are going to win, as I mentioned before, are not focused only on electric. They're focused on autonomous, which means they are focused on 3 of our major innovation platforms. First, robotics. Autonomous vehicles are robots. Second, energy storage. They will be electric because the total cost of ownership now for vehicles is lower for electric than gas powered.
Okay, before we go further here, I got to push back on Cathie again here, okay, and what's something Cathie Wood just talked about, and something that kind of bothers me with her numbers, her projections for Tesla stock, right? She's talking about this $15,000 price target on Tesla. As a Tesla shareholder, like, bring it on, baby. I'll gladly take it. But my main issue with Cathie Wood is I don't disagree with her that Tesla's in front of autonomous, taxi opportunity. I think they are. I think they're in the lead, and I think they're in the lead quite substantially. What I have a problem with her with is her assuming this business is going to be insanely profitable, and it's going to be insanely profitable basically from the jump. I don't know about that. If you're going to do anything big business, new strategy, you almost always lose money up front, okay? It's not like, you just start the business and already the money's just pouring in, you're making so much profits. And so it bugs me that she just goes to this place of like assuming that Tesla's going to be raking in mad profits and net income from this Tesla autonomous opportunity. And I think it can get there, but I just don't see that being realistic right off the bat. I think I could see it almost being a drag. If once they actually launch an autonomous taxi opportunity, right, network, and they'll do it in phases over time, and it'll probably take several years, right? But once they actually do that, I think the first few years are going to be a drag to net income. I think they're going to be a drag to EPS. I think anybody that's just predicting they're going to be super profitable right out the gate, it's making a big mistake. That's my personal opinion on that. Okay, and I think that's just one of many reasons why Elon's not going to be super aggressive to push this out. And I think he's going to do it in a very deliberate approach and just kind of, test it in different markets over time and then just slowly release it over those several years until eventually after like a 5-year span, it's like fully launched around most major markets around the world. And then it's like this big opportunity, right, that they're capitalizing on. But yeah, I wouldn't just expect profitability right from the go. I just think that's a mistake. I think they're going to have a lot of other profitable businesses build out, services, insurance, many various other things that they got going on that will be very profitable in the shorter term. But the autonomous taxi network opportunity, I wouldn't even think about that in terms of positive net income anytime soon. Like, not even for the next 5 years.
3, artificial intelligence. So these are 3 major platforms. Artificial intelligence will power these autonomous electric vehicles. And we believe that Tesla, from a thought leadership point of view, is leading the charge, so to speak, in this movement towards autonomous electric vehicles. And just in terms of your fragmentation point, the $5,000 vehicles, if you look at the range and performance of those vehicles, there's no comparison to a Tesla Model 3. The range is very limited. The power is very limited. So you really do have to adjust when you're talking about price for range and performance, which is what we do. And I do believe that Tesla has, for a given price, the best range and performance of any car on the market today.
Agreed.
One of the things I could say, David, sorry.
Go ahead.
That we're not just talking about battery technology, drive trains, when we're talking about autonomous. We're talking, as I mentioned before, about robots, energy storage, artificial intelligence, and we're talking about software as a service. So over-the-air software updates. I bought my first Model 3 in 2018. I have never taken it in for service. I have never been to any station. I don't have to go to a gas station. So think about that. How much in the way of costs and convenience I have.
But have you been to a space station, Cathie?
Saved over these last 5 years. The most important variable, we believe, in this new AI age.
By the way, real quick here, okay? I don't want to just gloss over what she just said, because it is very, very important what she just said. And I don't think nearly enough people talk about this, right? I'm sure you guys heard about the big recall Tesla had about a week ago or so, right? And I think it was in the news, like 300,000 plus vehicles. And, everybody freaked out about that in the short term and sold off the stock, thinking like, I don't know, maybe the algorithms aren't trained enough to understand, like, Teslas don't have to go in for that. Like, literally there's an over-the-air update and then, like, that problem's fixed, right? And that doesn't get talked about enough, because traditionally, like, if a car had an issue or whatever, and had a recall, it was extremely costly to companies. Everybody had to take those cars. It was super inconvenient. You had to take them into the dealership. It was like, who wants to go to a car dealership? It's a bad experience usually, right? And it wasn't the best, right? And the fact that Tesla can have an issue, whatever it is, right, almost anything, and just fix it over air. Like, that's magical. That's magical, and it doesn't get talked about enough. I think all of us that are super Tesla bulls, we understand this, right? But I think a lot of other folks that aren't in this community, they just don't even know about that. They don't even get that, and they don't process how meaningful that is to Tesla versus all other competition and automakers historically.
Is proprietary data. And I think if we're looking for killer apps, a lot of people are trying to compare this to the early days of the internet. And we didn't know during the early days of the internet that it was the apps on top of the internet that were going to garner all of the economics, the social networks, of course. And
that's an interesting point she just made there. It's like one of those points I just like to stop it and just kind of let that sink in for a moment there. That was actually a very intriguing point Cathie Wood just made.
5 years. The most important variable, we believe, in this new AI age is proprietary data. And I think if we're looking for killer apps, a lot of people are trying to compare this to the early days of the internet. And we didn't know during the early days of the internet that it was the apps on top of the internet that were going to garner all of the economics, the social networks, of course. And today what we believe people are missing is that the big winners are going to be those companies that not only have the right AI expertise, but also have the right domain expertise. If you talk about life sciences and multiomics, DNA, RNA, proteins, methylation, you've got to have domain expertise and understand that. But even beyond that, you have to have your own data. So we think that AI is going to cause one of the most profound productivity increases in the history of the world. And so you have to, as you're looking at investing, you must look at companies and how they're harnessing AI to lower their cost structures. That's the first killer app. And then other companies that have proprietary data, like Tesla, we'll go back to Tesla. It has collected over the last 5 to 7 years the highest number of real world driving miles in the world. In fact, it has probably collected more miles by an order of magnitude than all of the other auto and tech companies around the world. And that's why we think it is in the pole position to develop and win at the autonomous taxi platform strategy. The first company to get from point A to point B most safely and quickly is probably going to win. So we're looking at a lot of winner take most opportunities in this new AI world. And the winner take most, as I mentioned before, is based on bringing in the right AI expertise, the right domain expertise for your own businesses, and the highest quality and biggest pools of data upon which to train AI.
Okay, so two stocks I don't understand why Cathie Wood or top 10 positions for Cathie Wood in the ARK fund. Okay, if she sounds so bullish on AI, okay, if you are really that bullish about AI, there's two stocks in the stock market that have to be huge positions for you, in my opinion, right? And especially Cathie Wood, who's somebody that likes to take risk. The first one is Palantir. They sold out of Palantir a while back. I think, if you're really a true believer in AI, right, I don't think there's a company that's more well positioned to thrive over this next decade, at least in the B2B space, right, as well as business to government as well, than somebody like a Palantir, who's basically at the cross sections of using companies' data in artificial intelligence to help folks make better decisions, right? So I think that's a key one. The other one's Meta. I just don't understand why, if you're that bullish about AI, you got to understand Meta is going to be one of the leaders. If you're talking about who's got more data than anybody, I think, Meta has more data than pretty much anybody, right? And if you think about the work they've been doing on AI for years behind the scenes, it's not like this is something new for them. Zuckerberg and the team's been spending so much money for a long time. And I just think those are two stocks that I'm like, those should be top 10 positions in the ARK fund, and I don't understand why they're not. So I think Cathie Wood should get on that, in my personal opinion. That's just my perspective on that. I appreciate everybody joining me. As always, nearly 24,000 subscribers on this channel now. Thank you, everybody that's here. Also, for everybody looking to apply to join my private stock group, my private wealth group, check out the description area, and you'll be able to apply for us to join us in there. And have a great day.